Okay. This is I can't wait for it. And by request, I am looking at IMMP. I'm not even going to try to say the name, but let's take a look. And I've got lines everywhere again, and I am so sorry, but they kind of correlate with one another. And so I'm going to leave them there just because I want to show you how they all kind of like merge together into one. And I can make these kind of like merge together wherever I want them to, really, to be honest, and just move around. But the thing is that I'm not just making them look right. I'm making them go to where I think that they should go, but then I'm finding the price action that supports the angle of it doing that. And so if the angle supports it and I can make it get to a certain spot and it correlates with another piece of information that's doing the exact same thing, cutting through the exact same spot, or a past trend line that's doing the exact same thing and ending at the exact same price point, then you know, I think there's probably a little bit something to that. So that said, I took the measurements of all the candles, all the highs coming down from the trend line in the past year. Let me move this back. And I measured all those on the weekly, and then it came up with all, with these candles here. And so then I took that measurement, which this is just a copy of that one, pushed up into the high of this here. And it's saying that the low should be at 152. Now, this, by all means, if I take part of this out, I just do part of this, the one measurement, and I don't take any of these other measurements here because none of those are really actual highs. They're all kind of falling underneath this high right here. Then really the measurement is pretty close to being spot on, if not spot on. Let's see. There. Right there. And so it's probably a more accurate measurement is to take this one measurement, which is the first high, which is this one right here, and that's the only one because the rest of them fall underneath it. And so then that gives you this low right here. But then I take the other highs and I add it to it, these two here, and it's on the weekly, so these candles are kind of merged together. And I take those and add it to this, and then I get this length here. And so then I clone that and I drag it over here underneath this candle, and on the weekly, this is the high of the underneath of the candles here. And so I place that candle there, and it fits perfectly from there to this downward angle that I have off the weekly timeline of the descent of this candle coming down. And so that makes me think that if it did come down, it would come down to this area down here and hit this line, which I like to see whenever it breaks a downward trend. But it's not necessarily on the weekly, as I mean that you can find holes everywhere, right? It's going to come down at some point, and if it does, it's probably going to come down to that area. Is it going to come down right now? Probably not. I don't know. Normally, it does after this move right here. This kind of U-shaped gap up. It's basically a UFO is what they call it. And so when you have a UFO like this, where the wicks don't align really, and they got a body of candles together, it typically will just drop from here and kind of correct itself back into this timeline, back into this trend line that's going up at an angle right here. But that said, I've got a lot of things here pointing upwards, saying that it's going to go up to the $6.30 mark. And so I've got this trend line from the past, from this move back here, actually. And so I took it from this pop up here and measured it to there, took that one there, measured it there, and then measured the distance from here to here, and really got inside this measurement of this trade, and I came up with this trend line. Oh, and so I took it from here to here, which is the last point of structure after this big jump up, and I didn't measure this right here because this was the extra. And there's a reason for that. It doesn't correlate with the move itself. It does show where the absolute high could be, and so it would be way up here at $10.63. Do I think it's going to go up there? Probably not. I think that's why I call it the extra. I like to take it to the last point of structure on that measurement there. And so that's where I get this line right here. And that takes me exactly up here to, again, this $6.30 mark, you know? So I've got a trend in the past that goes up to the last point of structure on this massive move in the past, that I cut in half to take to the last point of structure. And it still takes me, it just magically takes me to the $6.30. And then I got these trend lines after the break of this downward trend. You have this you look for the angle of the candles that are pointing upwards to find the uptrend and where it's going to follow along, right? Well, I've got this long one right here that cuts through this candle, which I'm not a huge, I mean, I'm not against it, but I'm not a huge fan of that. But it does line up with this candle basically. It lines up with that candle there. And so if it did go up, it could cross over here at the 630 and go at this point over here. And then if I only get one of these arrows, and so that was this line right here going up at an angle. And so now if I look at this angle right here, and again, I'm cutting through this one, but I'm cutting through that one too. So, it's probably a common trend because this is a gap up and so is this one. And so really technically that candle shouldn't be there. So it really messes up the flow of where these angles are. And so if I'm cutting through that one, I'm going to cut through, this one as well. And so that's my ideology on that. And so you've got these angles of these candles going up like this. And again, it comes up and it hits the $6.30 mark. It crosses right across that line at the exact same place that this line crosses it. And at the same place that this line crosses it. And at the same place that this line crosses it. So, which is the measurement of the high coming from the bottom candle over here in the past trend. It's a separate trend from this one right here, but it's another measurement from the low to the high, and it crosses again off of this candle, which is the exact same candle back there that goes up to the high, crosses at the exact same place, the $6.30 mark. So ironic, I don't know. But then I take the measurement from the back that I did back here of the highs as it's coming down on the downward trend, and I moved it forward, and it fits perfectly in this spot right here. And I kind of said that already. And then I also measured the distance on that past trend from the high to the low, and it was a much smaller move than this one is. But I put it at the bottom of this movement here, and it comes down to this area right here as well, which is the $2.60 mark. So I'm seeing a lot of confluence in these two areas here. I'm kind of leaning more towards it going up to the 630 before coming down, even though it is technically after this move, it does come down. But I feel like if it does come down, it's probably going to come down to the last point of structure, which is right in this area right here, maybe $3.86, and then go up from there. So if you do see a correction in this, I would just watch it. If there's a correction in this, it's probably going to come down to the $3.86 mark in this area, close this gap, and then, or there's not a gap anymore because it's already been closed, but that's the last point of structures where these two wicks kind of meet right here. So, I mean, $4.32, $3.86, those in that area right there. If it comes down, hits that, it's probably going to bounce up and go long and hit that $6.30 mark. Hopefully it doesn't come back down from there because that would be a massive drop and totally go against everything it's been working towards. And then the other thing I can look at right now while I've got this going is what is the Wyckoff and the curve on this? And so on a daily, we've got one over here, and then it touches here, so this would be 2. Comes up here, doesn't break the high on this wick right here, but that would be 3. And then still up here, riding the top here, hasn't come down yet. This would be 4. And then 5, which would be your final dip into liquidity, and your spring, which would be this guy right here. 5 is easily identified when you see the Bollinger Band start to curve upwards to meet the price action. Price action's riding the upper Bollinger Band pretty high up here. It doesn't come down past the mean really at all. And so as it's doing that, it's dragging this upper Bollinger Band up. And so it creates this like a little kind of like a curve or a mountain or a hill or something like that, but it basically wraps, it goes over this area and then comes back down. It separates from this flat movement that it had down here, and it starts to come up and curve upwards towards it. So price action doesn't have to come as far down to hit it. And then it hits it, and look, it just puts one wick into it and it springs outwards. And then it goes to the upper Bollinger Band, hits the upper Bollinger Band, bounces off, goes back up. It just basically, it's what this is the spring. This is bouncing out of the structure, coming back down into the last point of structure, which was the last high structure right here, which is once you break a high, you come back, find support on it, which is basically the cup and handle. So here's your handle, bounces up, comes back down, finds support on the top of this cup and handle right here that it made, bounces up, comes back down, finds support on this cup and handle. There's a gap there, but this would be in this area right here, and then bounces up again. So that's the third one. So technically it should create another cup and handle, and it can actually just spur off into another 3 runs if it wants to. So 1, back, 2, back, 3, back, cup and handle, 1, back, 2, back, 3, back, cup and handle, and then it can come crashing down, and basically it'll make like a pyramid shape. So it should make a cup and handle right here. It probably should consolidate in this area if it doesn't just boost up and go upwards from here. It should probably just consolidate, making a cup and handle, and then it should probably bounce up and maybe go for that high to hit that $6.80 mark, and then come back down prior to the last point of structure, which is on the top of this wick or the top of this body of this candle in this right here in this area. So $4.79, $4.80 in this area where the top of the box of the consolidation that's going to be created right here. And so what I'll do is I'll just draw a box to indicate where the consolidation is going to be, to help visualize the overall movement that you're looking at here. And so probably what's it'll look like is usually when it kind of breaks into a new high, it'll drop out of the box and then come back in. So it'll do this move where it does this. You're going to consolidate, and then it's going to come down and drop out of the box to the last point of structure, which is basically the final dip into liquidity before bouncing out and going out of the, going for a new high. And so it's already at 1 basically on the move here, but it's because it's in a new high, it can just repeat this process, and basically the Bollinger Bands are going to tighten up here, and you're going to do a whole nother curve right here, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, and then it's going to bounce out and go long from here. So it bounces out of this box. This is the final dip into liquidity, and then it's going to turn around and bounce back up, find support on this area, maybe on top of the box, and then go long from there. So hopefully that helps. This is the last point of structure on top of this box here, which is also a big open area right here on this body of this candle that hasn't been wicked yet. So most likely, if anything, it's going to hit the upper half of this body of this candle. It's going to come back in and hit this node. Well, it's basically the last point of supply, and so it's probably going to hit the supply area and then turn around and go up from there. So that is my big pile of mess there, and sorry for all the lines everywhere, and hopefully I explained it so that you can visualize it and it wasn't too big of a mind mess there, or mind. So I can't wait for it, and I appreciate you. Subscribe, follow, comment. If you got any questions, be glad to answer them for you. And happy trading, and hopefully you make some money. And I will talk to you soon.